a look at the rand right now. It's finally starting to edge lower, breaking support at that 720 mark to push at about 716, 717 to the greenback. What are you making of rand movement right now?
Morning, Alishia. Yes, we saw the rand come back quite strongly yesterday, and we'd attribute that to a combination of a weaker dollar, rising commodity prices. We saw a return of a risk-on sentiment in the market, and so all of those conspired to see the rand strengthen quite significantly yesterday. As for where it goes to from now, we think that the bias in the short term is towards further rand strength. If it breaches the 717 level on the downside, then we think that in the short term a movement to 705 is possible. However, it's more likely that participants are just going to be marking time ahead of next week's GDP data and budget speech.
Let's take a look at your rationale for that calling of strength on the rand, because we've had commentary come through saying there doesn't seem to be impetus for a strong move, as the data shows investors continue to sell out of emerging markets specifically. So your broad rationale for that, or the basis for that strength that you're calling?
Well, Alishia, what we've seen in recent days is an improvement in economic indicators on the data front. And since at the moment most portfolio flows into the country are headed towards the JSE, we believe that the improvement in economic growth prospects is certainly going to be positive for the rand in the short term, particularly coupled with that improvement in risk-on sentiment. And in the shorter term, commodity prices continue to rise and will be supportive of further rand strength.
Of course, today's focus is on the G20 finance ministers meeting in Paris, and the IMF has certainly singled out the rand and the real as looking increasingly overvalued at this stage. What are your expectations out of that meeting?
Well, at this stage, Alishia, we don't have expectations out of the meeting. What's clear is that the G20 members are concerned about global imbalances and possibly currency valuations. The issue of currency wars that sprung up last year really wasn't dealt with resolutely. Rather, it was overshadowed by deterioration in conditions in Europe, which I suspect took some of the spotlight away from the currency issues. So it may be that is what the G20 is going to focus on at its meeting. And of course, any pronouncements or any comments to that effect could have a significant impact on the dollar and also on the rand. But as for speculating on what may come out of there, we prefer not to at this stage.
Let's take a look then at more concrete stuff. We've got UK retail sales being anticipated today, and the market's looking for direction on that front in terms of what kind of growth we could see on the consumer side there, right?
Yes, absolutely. Well, the market is expecting an improvement in UK retail sales. We're quite disappointed by December sales were up just over 1% on a year-on-year basis, and that's in spite of significant sales that were held in December that retailers thought would lure consumers in. But those plans were thwarted by one of the coldest Decembers that the UK has experienced recently that kept shoppers away. So in spite of the fact that there was an increase in sales tax in January, all our expectations are that as the weather conditions improved, consumers would have headed back into the shops, and therefore the market is expecting to see a significant improvement in retail sales.
Locally, you alluded to the fact that you're watching out for those Q4 numbers in terms of GDP growth right here in South Africa next week. We've seen the BER yesterday come through saying it recorded a 4% growth for the period. We're waiting for the Stats SA numbers next week. What is your ballpark range on that front?
Alishia, we've penciled in a figure of 5.2% for the quarter. That's significantly higher than market consensus, which is closer to 4.2%. Really, and our expectation of stronger growth is really on the back of the dramatic improvement that we've seen in household consumption, particularly when you look at the retail numbers. And in addition, we're also quite optimistic in terms of government spending in the quarter. So we penciled in a number about 5.2% for the quarter.